Imagine working for 30 to 35 years of your life, paying taxes every year. And the moment you retire, you start wondering, will my pension be taxed? Do I still have to pay income tax? Are there any special benefits for the senior citizens? And here is the surprising truth. Many retired persons in India actually pay more tax than they should simply because they are unaware of the benefits available to them. Yes, you heard that right. So, if you are retired or planning to retire soon, or even helping your parents manage their finances, this episode can help you legally save tax and manage retirement income better. Welcome to the Tax Talks by TNC Sridhar, where we simplify tax laws for everyone. Hello all, I am TNC Sridhar, and in today's episode, we'll discuss tax benefits available for retired persons, how pension income is taxed, special deductions available for senior citizens, and some of the best retirement investment options. So let's begin. Before we talk about tax benefits, let's understand one simple definition. Under the Income Tax Act, senior citizens are aged above 60 years and super senior citizens are at the age of 80 and above. Why is this important? Because the income tax exemption limits is higher for the senior citizens. For example, for normal individuals, the exemption rate in the old regime is 2.5 lakhs, but for senior citizen it is 3 lakhs. And for super senior citizens, it goes to 5 lakhs. So right from the beginning, law itself gives extra tax benefit to the retired individuals. At this point, I would like to clarify a bit is that the classification of the senior citizens, super senior citizens were all available under the 1961 Act. Now with the introduction of the new Act, which is coming into force from 1/4/2026, the age benefit has been withdrawn. In other words, the rate is same for normal persons, senior citizens and super senior citizens also. Now let's talk about the most common retirement income, pension. Many people ask this question, is pension taxable? The answer depends on the type of pension that you get. The regular pension, the monthly pension received after retirement is treated as salary income. So it will be taxable just as salary. However, you can still claim the deductions like standard deduction, chapter 60 deductions such as 80C, 80D, etc. Now the new Income Tax Act that has come into existence from 1/4/2026, the 80C deductions have been moved to a schedule. Same items are there. There is no change in items. Similarly, 80D, which talks about medical insurance, etc., are renumbered as section 126. In other words, the benefits available under chapter 6A under these two subsections are available in the new tax regime also. Now coming to commutation of pension. Sometimes the retired persons take a lump sum amount instead of the monthly pension, that is called commutation of pension. Here the tax treatment is interesting. The government employees, the entire commutation of pension is exempt from tax, while for non-government employees it is partially exempt depending upon whether the gratuity is received or not. So proper planning can significantly reduce the tax liability. Now just a few words about commutation of pension. The concept is that certain part of the pension, say up to 40%, can be commuted. That is, for a period of 15 years. This commuted pension is recoverable from your pension when the pension is given to you. For example, suppose you have taken a commutation of pension to the extent of say 1 lakh. So for a period of 15 years, this 1 lakh will be recovered from you in equal installments. In other words, it is an advance paid to you which is recovered by the government from your monthly pension. This is what is the scheme. So now let's look at the special benefits available only to the senior citizen. No advance tax for certain cases. If senior citizen does not have business income, they are not required to pay advance tax. This reduces the compliance burden. Higher deduction for medical insurance under 80D. And for senior citizens, health insurance deductions can go up to 50,000 per year. Medical costs increase as age advances. So this deduction becomes extremely useful. The deductions for medical treatment under section 80DDB for treatment in certain diseases like cancer, kidney failure, etc. Senior citizens can claim deduction up to rupees 1 lakh. Now the provisions of 80D, which talks about medical expenses, and 80DDB, which talks about senior citizens, special diseases like cancer, etc., etc. Benefits have been retained in the new Act, Income Tax Act 2025, under sections 126 and 127. In other words, these benefits available are being extended. Interest income deduction under section 80TTB. This is a very powerful benefit to senior citizens who can claim deduction up to 50,000 on interest income from bank deposits, post office deposits, fixed deposits. So many retirees who depend on fixed deposit income can reduce their tax liabilities significantly. This benefit has also been extended in the new Act of 2025. Best retirement investment options. Now let's talk about some of the safest and most popular retirement investment options in India. Senior Citizen Savings Scheme, SCSS. This is one of the best government-backed schemes. Benefits include higher interest rate, quarterly income, government security. Eligible for ATC deduction. Maximum investment allowed is 30 lakhs. Next is Pradhan Mantri Vay Vandana Yojana, PMVVY. This scheme provides assured pension for the senior citizens. It is backed by LIC and Government of India. You get regular pension payment for 10 years. The Post Office Monthly Income Scheme is a very popular option for the retirees who want stable monthly income. It is considered low risk and reliable. The tax-free bonds. These bonds provide interest income which is completely tax-free. So the retirees looking for tax-efficient income can consider them. However, availability depends on the government issuances. So, here is a simple retirement tax strategy. Use Senior Citizens Savings Scheme or Pradhan Mantri Vandana Yojana for regular income. Keep some fund in fixed deposit for liquidity. Use 80TTB deduction for interest income. Maintain health insurance by claiming 80D benefits. With proper planning, retirees can enjoy the financial stability and tax efficiency. Remember, retirement should be a time for peace of mind, not for tax confusion. Before we close, remember one important thing: even after retirement, tax planning remains very important. If you found this episode useful, share it with your parents, relatives, and anyone nearing the retirement. Do not forget to subscribe to the Tax Talks by TNC Sridhar for more practical tax insight. Before we wrap up today's episode, here's something special. The next episode is a milestone for us. It's going to be our 25th episode on Tax Talks by TNC Sridhar. And to celebrate this journey, we are doing something different. In the next episode, we will take a step back and give you a complete wrap up of all the topics we have covered so far, from the basics of taxation to advanced concepts. And we would also like to say that we are happy and grateful to all the feedback and comments and support we have received from you. Your encouragement has given us the motivation to create more and more episodes and to keep simplifying taxation for everyone. Whether you are a new viewer or someone who has been following us from the beginning, this episode will help you revisit the key concepts, connect all the topics together, strengthen your understanding of the taxation. Don't miss this special milestone episode. And if you haven't watched the previous episodes yet, this is the perfect time to catch up. Stay tuned to Tax Talks by TNC Sridhar because the journey is just getting started. See you next Thursday at 12:30 p.m. Until then, stay aware and stay tax smart.